Hi everyone, it's Kathleen Brooks here again, Research Director at XTB. Now, tomorrow we have the Bank of England meeting. There's no expectation that they're going to change policy at this meeting, and it's not a meeting where we get a press conference from Andrew Bailey either. At 12 p.m. BST, London time, we are going to get a statement and the minutes from that decision. Now, no expectation of a cut, as I said, and that's because of a few things. The Bank of England only has an inflation mandate. We got inflation out today. It's still slightly above the Bank of England's target at 2.2% for headline. However, we did see an increase in service price inflation to 5.6% from 5.2%. Now, normally that would send people or the market into a bit of a tiz that the Bank of England are going to have to start hiking rates even. However, it was because of base effect. It was to do with a very large increase in airfares, which is seasonal as well. So I think the Bank of England will look through that. But now expectations are that we're going to get a November rate cut. And we've got about between kind of 40-ish basis points of cuts priced in for the rest of this year. So we are looking at no change from the Bank of England tomorrow. Right now, that has really bolstered the pound. We've seen the cable rate rise, test 132. If we look at chart 1, this chart shows the white line is the cable rate, so sterling against the US dollar, and the red line is the interest rate differential, or the differential in expectations between what is expected for the December rate meetings for the Federal Reserve and the Bank of England. So as you can see, the interest rate differential is benefiting the pound at the moment. So there's a bigger rate, less chance of rate cuts in the UK relative to the US. So the interest rate differential there is very pound positive, and that has benefited the pound, and that has benefited the pound versus the US dollar, which is the white line in this chart. So they're very much moving together. This means that the pound is a little bit vulnerable. Now, what are we going to look for in the statement that comes from the Bank of England tomorrow? Any concern about growth? Growth in the UK has been flatlining, and it has been weakening in the last couple of months, even that all-important service sector. Now, that if they sound very concerned about that, and that they're not that worried about inflation, then we could see some downward pressure on the pound in the coming days. However, we think that any downside could potentially be short-lived, because ultimately they do have an inflation target, and we still think that the Bank of England won't cut as aggressively as the Federal Reserve. But that's what's coming up in the next 24 hours. So thank you so much for joining. Good luck trading over the next 24 hours. There's certainly a lot to keep us all occupied. Join us later. Thank you.